stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
There are a couple of very interesting top picks for you this time around. I'm lucky if I can pronounce these names, but these gentlemen, Brian Bolin and Jeremy Mullen, actually know a lot about them. So, Brian, we're going to start with you. You have uncovered, pun intended, a wood chip manufacturer, right? From underneath a pile of wood chips, Enviva Partners.
Enviva Partners, and normally I'm a growth guy, and I like to see big revenue growth and that sort of thing. And this is an MLP, and an MLP pays a big dividend. So normally you don't associate big dividends with growth stocks. But this one looks pretty good to me. I think there's a lot going for it here.
Okay.
It is a Zacks rank #1, and I think that's one of the most important things that we have to start off all of our searches for new stocks. We want to see that strong, positive earnings estimate revision. If we take a look at the style scores here, we got an A for value, B for growth, which is okay. I like to see a big divergence in those two, but I don't get it here. But what I do key in on here, besides this nice fat 8.3% dividend yield, which is really great. But I'm also taking a look at a forward PE of only 15 times, and that's something that really has got to grab your attention. Obviously, the stock is running up close to the 52-week high. Right now we have it at $25.60, and today it's at $25.47. But there's still time left today, Jeremy, in which we could reach a brand new 52-week high. One of the other things that we love to take a look here at Zacks is the price and consensus chart. Now, this is somewhat new of a stock here. It hasn't been around for about 2 years, so we've only have a few reports in here, and the data in here isn't pretty, so to speak. But we do see the stock rolling down to 12 and bouncing back up and over 24. So we've had a nice 100% gain in it since about a year ago. I would look for more things, good things to come. Wood chips, biofuels, that sort of thing is really kind of the focus here.
Yeah.
So I think that there's a lot of legs to this story long term besides just the numbers.
All right, Jeremy, today's August 30th, by the way, in case you weren't paying attention. But
and I never am.
Your company is Cotiviti Holdings. This is a technology services company. Looks like they've been seeing a lot of solid estimate revisions lately.
Yeah, Cotiviti, they have. And basically that's because of a recent earnings that they killed, and the stock price really reacted to that. But first, I'll get into what they do. Basically, they are payment auditors for specifically mainly the healthcare industry, but also do a little retail. These guys basically take all the data that their clients have, and they analyze it and look for value that they can unlock within. So specifically for the healthcare industry, you have your payee and your provider. They want to make sure they're not overpaying these payees or the insurance companies, and basically try to unlock value. And they're finally, when their IPO was in May, they said they unlock about $3 billion for their clients. So that's a lot of money added up, and you can see why a company would want to use them. So they IPO'd back in May, around $18 a share, and I got this chart if you want to look at this right back here in May, and you can see the nice steady incline it's had, kind of slowly grinded higher, and this big move higher, which was the earnings report, okay? And you see this like just huge red bar here, which is a 15% down move, no news, right? So Counter-Strike actually bought it, and now it's grinding back up to 33. I really like this approach up to 33. I think it can break up and maybe go higher. My price target near term's 35 on it. Reason being, I'll get into these earnings. They beat on August 9th, 37 cents versus 29, so 8-cent beat. Revenues 158 million versus 146 million. They saw 22% growth on their the healthcare side of their business, and so that's great growth right there. And if they can keep on doing that, I think the earnings are back in November. There's no reason that this momentum can continue higher. A risk to look out for is if these companies start to do this on their own within their business, this kind of analysis. Obviously, why would they need a company like Cotiviti? So you got to look out for that if companies start trending and doing it on their own. Another risk would be cybersecurity. If one of these bigger companies gets hacked, that's going to prevent them from doing their work, which would obviously, screw up a quarter, basically. So you got to watch out for that.
Yeah.
If something like that happened to one of their clients or to them, the stock could really get hammered because it is a recent IPO. it is still risky, so investors wouldn't want to take any kind of risk
Right.
if there was damage to those numbers.
For now, though, is there
For
a
now, I
dividend?
like it.
Is there a
Near
dividend?
term, with no dividend.
No
It's
dividend.
a newer company, yeah.
Oh, okay.
The PE is 26. It's about a $3 billion market cap.
All right. Do either of you own either of these?
I do not.
I don't, but I own it in Counter-Strike.
Okay.
Yeah.
But not personally.
Right.
All right. Thank you both for that. Don't forget, you can always check out more stock information on our website, Zacks.com, stock picks, stock picking strategies, and more. Get on over, check it out. Link to it all right off the home page. With Brian and Jeremy, I'm Terry Ruffalo.